now after the Canadian banks reported, I decided to play those with options last week. So I'm going to talk to you about one of my strategies. Now we all know on Monday the market plummeted and then bounced back significantly. So this offered some great opportunities, both going short initially and then going long afterwards. So what I did as one strategy was I bought some calls for way out in the future on Canadian banks. So one of my trades was Bank of Nova Scotia. I bought the furthest out calls for January 2018. And at the $40 strike, I only had to pay $18.15 per share. So basically my cost was $58.15 per share. And the stock was trading at that point at just under $58. So I was paying a very, very, very tiny premium to have 29 months out a call option. Then what I did with this, I sold a $59 strike on the weeklies for 20 cents. So with that, I was basically able to get a possible profit of $686 or 10% of my investment in 1 week if the stock rose. And of course, the banks reported well. The stocks were doing well. Scotia hadn't reported yet when I bought this one, but BMO had reported very well, and the stocks were around 52-week lows. So I figured there was very limited downside and some good upside over the long term, but I didn't expect any massive moves. You never see 10% moves in the Canadian banks. So using this diagonal call strategy, what I'm going to do is keep this January 2018 call, or multiples, I did several of them, and then keep writing weeklies against them to collect a few $100s every week. So last week I collected about $370. The stock went above the strike of 59, so I was already in about a 10% profit position. So I bought back my calls and then sold the weeklies for the next week, and I'll continue doing this. Now, in 29 months selling weekly options, this would be a total of 116 weeklies. So if I can earn a couple $100 every week, that's going to be a very, very good return over those 29 months. Now, in this example, you could possibly earn a 600% profit. Highly unlikely. The stock's not going to trade flat with the exact same premiums all the time. But just as an example, you can easily double, triple, quadruple your money using this diagonal call strategy. And you're only paying 1/3 of what the actual stock would cost. So some people say, well, you're not getting the dividend. They do pay a good dividend. Yes, I do have some of the banks long for the dividends and for safe investments. But if you're looking for a little better return with a little less capital down, I made more in 1 week, percentage-wise, than the dividend would give me in 2 years. So this diagonal call strategy provides consistent income, either weekly, monthly, however you want to write them. And at these levels, I see very limited downside because I really don't see the banks getting that much lower. Alright, so I hope you enjoyed this video. Please subscribe to Day Trade Canada on YouTube, and you can also follow me on Twitter or add me on Facebook. Happy trading.